Hello, everybody. Welcome to Clef Investments. Today, let's talk about commodity. So what is commodity? Commodity is a lot of raw material that you can buy, such as gold, oil, or stuff you can grow in the ground. So like coffee, uh, beef, pork, wheat, butter, and so on. So lots of stuff, if you can dig it from the ground or grow from the ground. And for the commodities, our everyday life don't need it directly, but many factories use it. So the way to invest in commodity are buying ETFs or futures. A future is a contract that require you to pay a little bit deposit now, so that in the future and the future date, you need to either deliver the commodity or get the commodity. So for investors, you don't need to do that. So you better close your contract before the future expiration date. And future has very high leverage. So which means you only need to invest a small fraction of the total amount of the commodity, so you can speculate its price move. And because of the high leverage, it's very risky. And you can not only buy futures, if you bet the price will fall, you can also sell the futures. For ETF, if you buy, you can buy and hold for a longer time. But compared to the stock index or real estate, commodity doesn't really have a long-term growing trend. So if you look at the commodity from many years ago, it never grows like a company's common stock. This is because for the commodity, the price can often drop if there's a better method to produce the commodity, such as a new way to mine the oil or a new way to grow the wheat. Those prices will drop. And also, if you find a replacement, the cost will also reduce because you could use other cheaper replacements. For the stuff that you can grow from the ground, there's often a season cycle, like depend on different season or depend on the weather. Then the amount of weight you can get go up and down, and the price also goes accordingly. But either way, I do not recommend to invest in commodity. So those are used for the experts who really know the type of commodity they want. And for our average investors, I would recommend to stay away from commodity and compare commodities to the company's stocks. I think commodities do not create value. We use commodity as a raw material. But for the company's stocks, they represent the growth of the companies. And there are lots of people working hard in the companies try to create more value. So a good company's stock can grow a lot. They grow with the economy. But for commodities, they are raw materials and they do not generate new value. So I guess that's why in the long term, a collection of good stocks, such as the stock index, can grow exponentially, but commodity doesn't have this property. If you look at the gold, because of the inflation, because our government or every government print more money than necessary, it causes inflation and the price of gold increase. But the amount of increase in gold in the long term can never compete with common stock. So in summary, please stay away from commodity unless you really know what you are doing. Okay, that's all for today. Thank you.